Good morning, everyone. Thank you so much for joining us today at ePay Europe for the first session of the day. My name is Nina Mohanty, and I'm the founder of Bloom Money. I am so delighted to be here today with an absolute rock star panel to be talking about financial inclusion, which I think is more relevant than ever before, especially given the past year that we have had. We know that there's been a rather sharp shift away from cash, not just to card, but beyond that into contactless payments and digital payments. And that begs the question, as we move into a more digital payment world, into more innovative payment solutions and banking solutions, are we perhaps leaving people behind? So I am, as I mentioned, super delighted to welcome a wonderful group of panelists today. We've got a lot to cover, so I'm going to go ahead and introduce each of them, but also, as I introduce each person, would love them to tell us a bit more about yourself with a quick summary, but then also answer, what does financial inclusion mean to you? I think very often we hear lots of companies talking about themselves as financial inclusion companies or having a financial inclusion initiative. And sometimes it seems a bit like the new greenwashing, where it's very a la mode to be talking about financial inclusion. So I'm very curious to get your definitions. So I'll go ahead and introduce the panel. To start, we have the magnificent Alice Tapper, who is the founder of Go Fund Yourself. Alice, how are you doing today?
Very well, thanks for having me.
Thank you so much for being with us. Why don't you tell us a bit more about yourself and then a bit about what financial inclusion means to you and how you define it?
Sure. So, yeah, I'm Alice Tapper. I run Go Fund Yourself, which is a financial news and personal finance platform for young people in the UK. And I'm also a financial campaigner. Last year, I launched the Regulate Buy Now Pay Later campaign, which led to the regulation of Buy Now Pay Later. And to answer your question, I guess I come at financial inclusion from a slightly different angle, and also focus a lot on financial literacy. But for me, I think financial inclusion is to look at it from, what does a world look like in which financial inclusion isn't a problem? And I think for me, that's where there is a level playing field, really, when it comes to access to good quality everyday financial tools. And I think the really important word there is quality. I think that's kind of an emphasis on financial inclusion.
Wonderful. Thank you so much for being with us today. Next, we have Matteo Rizzi, who is a venture partner at Bamboo Capital Partners and a fellow co-host of Good Morning. Why don't you tell us a bit about yourself and what financial inclusion means to you?
Hey, hello everyone. Thank you, Nina. Pleasure to be here. Well, on the top of the two things that you mentioned, I also managed I co-founded with the former CEO of Swift, where I spent 13 years in my official corporate previous life. We co-founded fintech stage, now FTS Group innovation programs, and I work a lot. I would actually skip everything else because otherwise it's going to be a bit long, the presentation part of this initial statement. Financial inclusion to me means broadening and deepening the financial aspect of life of people. And my angle is Africa, of course. One, because I invest there with Bamboo, but also because since 2015, when I was working for a media network, today Flourish Ventures, and I discovered that there are different ways to get this 400 million people that are unbanked in Africa into some sort of financial inclusion, as we say. There are different ways of doing it. Investing in startups that are focusing on this is one of them, but actually other ways. But that's my angle.
Wonderful. Thank you so much for being on with us this morning. Next, we have Richard Davies, who is the CEO of a legal bank, but also a recently minted board member at World Remit. Good morning.
Thanks. Morning. Yes. So, well, thanks for the intro. I mean, I've got a long background primarily in the kind of SME banking side, which is my current day job with Alaka. But I was super pleased to join World Remit, which is it's a fintech remittance company, which is very much focused around that financial inclusion, particularly into developing countries. Which, if you go way back in times when I was at university, I was an economist and actually did a master's in development economics. So it was very excited to join World Remit, where there's a very interesting purpose around financial inclusion. So very happy to talk about that today. And I guess just in terms of what does it mean to me? Being an economist, I kind of use how the World Bank thinks about it, which is the availability and equality of opportunities to access financial services, be it payments, be it borrowing, be it insurance, and so on, which is something you take for granted quite easily in a sort of rich country as a sort of employed person and so on. But quality of access and availability of access is definitely not something that's common across the world.
Amazing. Thank you for being with us. Next, we have Nabil Irshad, who is the Vice President of Government and Public Sector Business at MasterCard, and someone I like to call a friend. Good morning, Nabil. Thank you for joining us. Why don't you tell us a bit more about yourself and what?
Yeah, sure. So in terms of my role day-to-day at MasterCard, principally it's around working with both national government departments and also with local authorities around championing digital payment solutions. And these can be quite diverse, everything from things like procurement cards for T&E, for B2B payments, large hotel, that sort of thing, but also on the prepaid side to disperse funds from the government directly to citizens. And that's where we see a lot of our more financially inclusive programs, they kind of play in that space. In addition to that, sort of my role is also around championing in the UK and Ireland financial inclusion, and MasterCard has a very long-standing kind of interest and desire to bring more people into the financial system. But in the UK, for example, we are part of the Emerging Payments Association Project Inclusion. We also champion the Inclusion Foundation, and there's a number of other things that we're involved with. For me, I think financial inclusion is around giving people access to affordable products and services that meets their banking, payment, financial needs, and having those products kind of appropriately accessible as well. And we would argue that has a kind of sort of a very strong link with digital inclusion as well, which I'm sure we might get onto a bit later on. The other element for me is also around financial education, which is something that Alice kind of mentioned, but that's very important as well. So people really understanding what financial products they're taking out, understanding what it means for them, and what the implications are as well in terms of their use of that financial product. So those kind of two elements to me are kind of key towards understanding what financial inclusion is.
Wonderful. Thank you for joining us. And last but certainly not least, we have Des Bowman, who is a compliance and AML consultant and security expert. Thank you so much for joining us, Des. How are you doing? Tell us a bit more about yourself and what financial inclusion means to you.
Good morning. Thank you for allowing me to be on here this morning. Myself, AML and compliance professional. I'm almost, if you want, the poacher turned gamekeeper. I used to be a stockbroker. I used to be an investment banker. I then got involved in what wasn't called fintech then, but it was the prepaid card industry, working with online gambling, etc., etc. And I've helped many companies in the last 15 with card schemes and whatever. And I've found really that certainly anti-money laundering regulations and whatever have actually created quite a lot of financial exclusion, which is why, to me, for me specifically, financial inclusion, just kind of the regulations and possibly the way things are done seems to me to be the way that, because of its purpose of trying to do the right thing. My definition, I guess, of financial inclusion is very similar to a lot of other people. You know, it's one of those aspirational, if not attainable, phrases, unfortunately, which kind of everybody tries to equally available and approachable access to financial services for everyone, and it's regardless of their level of income, and that's the most important thing. That's my definition, really.
I love that, and I very much agree. So I guess I care about financial inclusion. I think we've touched on financial inclusion broadly around the world, but just to give you a quick statistic, the FCA estimated as of last year that within the UK alone, there are 1.2 million people without a bank account. So that's actually 2.3% of British adults without a bank account. African continent, we've got huge swaths of people, several hundred million, without access to banking services. And I'm sure if you include other parts of the world, that number grows substantially. So we've got financial inclusion in our own backyard to think about, as well as the rest of the world. Why should we care about with you, Nabil? In your role at MasterCard, you definitely see here in the UK, also abroad. Why should we care?
So I think that there's sort of several reasons why we should care and why we should want to do something about it as an industry. In the UK, there's something called what's known as the poverty premium. And there's been a lot of research done which shows that people who do not have access to sort of banking services typically pay more for the sort of goods and services that, you know, people who are banked would pay less for. So to give you a good example, if you don't, for example, for your utility bills, typically you might be on a prepaid meter, which is generally more expensive per unit of energy used. Similarly with things like affordable credit. So if, for example, you want to buy a relatively large item, say a fridge or a dishwasher or whatever it might be, many people might use, say, a credit card, or they may use buy now, pay later, or they may use another form of low cost, have a bank account, etc., etc. But if you don't have any of those things, you've either got to pay everything up front in cash, or you have to go to fairly expensive payday lending companies, or loan companies where you'll pay much more than, say, someone who's actually much more well off than you potentially, and who has much more of a kind of financial history. So any country, I think you also have to address financial exclusion, because people who don't have access to those products end up paying more for things that actually are cheaper for the rest of us. So there's a kind of moral, I guess, dimension to that, why we should want to do it. I think the other reason also is because, as I say, we're talking about wanting to try and bring people into the financial institution. It's not just about people who are unbanked. I mean, obviously that's a bank account, but it's also people who are kind of, we might term them underbanked, who don't have access to the same kinds of products and services. Now, there are lots of reasons for that. I used to work in retail banking myself. It's inappropriate, for example, to necessarily always offer an overdraft to everyone. It may also be inappropriate for everyone to take on a mortgage, for example. But I think it's the onus is on the industry and on all of us working there to try and help. That might, for example, involve credit building applications. It might involve ways in which you can help someone, improve their credit score. It might be something to do with access to payments, or making it easier for people to make regular payments, bill management systems. There's lots and lots of things which I think are people kind of on that journey. So those are kind of two main reasons I think it's important to care about this. And although I'm sort of based, and focused on the UK. I think, those sort of principles are probably applicable in many other territories.
Absolutely. I think to your point about it not always being appropriate for someone to have an overdraft, have £1,000 of credit, is very pertinent to what Alice has been doing with her Regulate Buy Now, Pay Later campaign. So I wonder, from that lens, Alice, why do we care about financial inclusion and perhaps literacy as well in this regard with?
Yeah, well, I completely agree with Nabil, and I think that the important point here is that financial inclusion is not just about good financial outcomes for people. I think achieving financial inclusion is really a kind of key equality, whether that's kind of racial disparities, disability, and so on. So focus on those areas of inequality are kind of less effective and even kind of redundant, I think. On financial education and financial literacy, I think it's a really interesting one. It's something I thought a lot about, thinking that financial education was the key to everything, and that as long as kids would talk about money in schools, then we're all fine. And I think it's really important that we kind of look beyond that, and what we tend to see is this kind of financial education almost being used as a scapegoat, that you blame poor financial outcomes on the lack. In fact, and this is something Nabil touched on as well, often it's a failure of the financial industry to actually create good financial products and, really importantly, and give people the information and education they need at the point at which they need it, and at the point at which they're making financial choices. And I think maybe financial education in schools, I'm kind of not saying that's not useful. The emphasis needs to be on people in the financial industry testing their own communications and testing their own products in tandem with financial inclusion efforts, if that makes sense.
No, absolutely. And I think that kind of, I see a parallel with something that Des said earlier in regards to AML and kind of regulation, and how perhaps it's actually excluding people in trying to protect having an overdraft available. Perhaps similarly, Des mentioned here about AML or anti-terrorist financing, for example. AML or anti-terrorist extrapolate a bit on that point made earlier about how extrapolate a bit on that point, including people.
Yeah, sure. Actually, just to say, Alice, I totally agree with you that financial education needs to be on the financial institution side to understand how people can either drop in, get out of it. And for me, in terms of looking at from the AML side, I see regularly that the financial institutions can just have these. There's regulations. We have something called KYC, know your client. Well, if you talk to people like managing your client, knowing your client is not just about having a name, address, and a date of birth. If we can understand it, I can then start looking at other things. And I think for financial inclusion or to prevent financial exclusion. And so there's something that I'm kind of like developing at the moment, purely because in the last, I'd say less than 18 months, I have personally had a very good friend who's gone from married 2 children to going into refuge 2 months before lockdown to actually going now into a position proof of identity. They're living anonymously, and she's living in a very, very bad financially excluded place. And things that when I start talking about identity, I start talking about I'd like to see a better way of approaching that that individual that I'm talking to, is allowed access to improve not only their welfare, but provide the building blocks for their future growth or whatever. And this can happen anywhere in the world. If I look at Europe, UK, Europe, and maybe the richer countries, we've got something that I'd like to call. The worst thing is the name, all these phrases. Participatory surveillance is something as a result of lockdown over the last year. We've had a lot of distrust of participatory surveillance. You look at the test and trace processes and things like that. People say, I don't want them to have this information. There's a lot of distrust of what's happened with various ideas. If there was an ID-sponsored citizenship type of process that fintechs and we've already heard how even MasterCard can provide these kind of gateways to be able to use money. However, inability to identify that person. So if we start talking about an ID sponsorship, similarly they have something like parent-child cards. Your 12-year-old child or your 15-year-old could have a card, but you're the one that's ID'd and you know what they're spending. Well, it would be nice to be able to bring in some sort of act. Things like in the media, we live in clans, we live in relationships, and we live in reputational communities. And all of us have probably shared our activities via LinkedIn, Twitter, Facebook, Instagram, WhatsApp, and whatever. And you share your activities, you share your beliefs, you share your whereabouts, you share your statuses, you share your preferences. All of that goes to identify. And if we can simplify that, I think that process, and maybe that's going back to behind the scenes where the financial institutions have to lobby the regulators to understand that identity. Why do you need my name, address, and date of birth for me to go and have a drink in a pub, for instance?
Which we can now in the UK. On that note, though, I saw you nodding along, Richard, and I think KYC is probably something that you touch upon a lot at World Remit, but also, I mean, in all of your hats and different roles that you have. I'm curious, specifically speaking about remittances, why do we care about the fact that people can send money home or around the world? Like, why does that matter to us sitting here in London?
Yeah, so let me start that and kind of again come back to what Des was saying about sort of impact of AML excluding whole segments, because I think it's very relevant to the remittance industry. So yeah, I guess why is it important? I guess kind of three intertwined trends for me. One is, I find this statistic staggering, but if you add up global remittances, it's about $600 billion a year. That's 4 times the size of the overseas aid budget from the OECD countries. And it's by far, for example, the biggest source of foreign investment into Africa. So it's easy to go, oh, well, it's sending $200 to friends and family, but it's actually by far the biggest contributor of foreign investment into the whole continent there. So it can't be understated how, sort of, for example, if people are cut off from access to that, how much impact it can have. And also, for example, historically, the cost was 8-10% often of sending these things, which is a huge amount of that money being taken by middlemen, which is not good. And then I think the other interesting trend, which I think Matteo mentioned around the unbanked population, and I think the really interesting trend there, which Africa's been right at the heart of, but also many developing countries have seen as well, which is mobile money, things like M-Pesa and MTN. And I think there's now forecast to be over 600 million people with mobile money accounts in Africa next year, when I think still over half the population will be unbanked in terms of formal bank accounts. So I think there's really interesting connectivity there between that remittance, $600 billion of money and mobile money as a delivery mechanism in country. And then what connectivity also does in things like ongoing services like microcredit or insurance, or there's loads of other stuff that sits on top of that opens up back to the kind of availability and quality of access point to financial services. And so, yeah, I mean, World Remit's the leading provider of that connectivity of developed world country to mobile money wallet in country. And I'm super excited by the potential of that over the next few years to really help just make access fast, cheap, and also secure. And I guess that secure point is where it perhaps links to somewhat what Des was saying. I think historically, with some fairness, particularly where it's cash-based, the remittance industry has been linked to financial crime, where you've seen sort of bad actors using they're depositing cash in the US or in somewhere in Europe or wherever, and it's being sent around the world, and it's being used for money laundering or terrorist financing or various other purposes. And that led to a whole sort of de-risking by correspondent banks of the remittance providers, probably about a decade ago it started, which was kind of the tightening of the regulation, the pressure from the regulators, but then actually cut off quite a lot of customer segments initially from access to that vital service I was describing, i.e. the biggest source of foreign investment to a developing country, and sort of the lifeline for kind of a family living in rural Kenya or something. And so again, I think that the rise of fintechs like World Remit and others has been really important to solve that, where it's a purely digital transfer mechanism, and you have got therefore much better availability of data in order to do relevant screening for sanctions, for money laundering and so on. But I will equally completely agree with what Des says around the ideas at the heart of this problem, and I don't think it's been fully cracked at all yet. And the real problem, I've worked on this in very large global banks, I've worked it in fintechs, and I mean, particularly in a large global bank, the incentive is just to go for the easy solution that fits the 90% of the population. Right. The electoral roll, kind of Experian, Equifax in the UK call, and or the sort of selfie plus ID, which is like passport or driving license, which does fit most people, right? But then for everyone else, that's sort of the remainder, it's a problem, because you've got, you've just come to the country and you don't have that stuff. You're a refugee, or I think there's definitely still a big problem to crack in identity, particularly, frankly, as for because there's no direct link to government for validating, like, is the passport document you've got and the photo actually the right one. I mean, you can buy like a pretty good fake, right, $500 on the dark web. So it doesn't actually even prevent the bad actors this stuff with the current ID methods. So yeah, I fully agree with Des. There's a lot of work to do on that.
This is not advice for anyone to go buy passports on the dark web, by the way, now that
certainly not
through the roof. But I think we're going to circle back to that. I did want to just check in with Matteo, make sure that you're still with us, Matteo. But we have talked about bridging the gap from, say, more developed countries like the UK into the African continent. That I'm very bullish on the African continent. I think the stat is in about 20 years, half the world's working population will be on the African continent. So I'm curious for you, why you are so interested in financial inclusion there, and perhaps more broadly in emerging markets or continents.
Well, like in everything in my personal life, there is a story behind these reasons. So I started investing, actually looking at the African continent back at Swift with InnoTribe, when fintech, as Des was rightly pointing out, wasn't really a word. We're talking about over a decade ago. Then, after like 2013, 2015, started investing in it, with Omidyar, and then kept going back to the continent and experiencing with my own hands what is called the hidden third. So there is 33% of GDPs in Africa that comes from informal economy. And funny enough, in Europe is not that much less. It's still 20 to 25, but in Africa and in Latin America, it is called the hidden third for a reason, because it's 33% of combined GDP. And if you take this, and then you take the fact that 60% of the active working population beyond 15 years old, and here is the statistics, which is 2 billion people, has worked in informal economy at some point in their lives. So when I see now startups in Africa that are, for example, so the two first employers in Africa are agriculture and mining. So I see startups that are working in this field, trying to digitize and bring data into some of these transactions so that these people can, get better insurance for their crop, can not get squeezed in selling the minerals that are digging with their own hands, into the big consumers of this world with a bunch of intermediaries that actually penalizes the people who actually dig the last mile of the chain. And I see the opportunities that technology can bring to make the world fairer. Is as simple as that, which is also the ultimate reason why I hope fintech has come to an existence, right? And as a European, as a European Italian with a French family living in Lisbon, I studied in Spain. I also spent time in over 20 countries in Africa, and there are African is very polarizing. You either get completely swallowed into the passion to working into it, or you just can't stand it. But it's just epidemical, right? And me, I belong to the first category. Is as simple as that. I think that another part of my bio that would be a good time to talk about is that I founded something called timepledge.org, which is a platform that coaches for free African entrepreneurs to start with in soft skills. And the reason why this platform is in place, and of course it was going great pre-COVID, but now doing presential coaching is a bit complicated, and virtual doesn't work that well when we're talking about first-time entrepreneurs specifically, is the fact that one of the concrete sort of side helps to financial inclusion is to try to talk with the young people in Africa, which is, of course, the youngest continent of the planet, on what does it mean to become an entrepreneur and to work with their ideas. Some of these young, guys and girls, they'll come to you, they are a photographer, and they think they are a startup. So they go and they look for funding, or they apply to the MasterCard, the startup thing. But what they do is that, they are a professional. And even that very basic concepts, okay, for them is a broader help, very basic, but that will help them sort of self-defining themselves, and this is, there is the top-down approach, but this is the bottom-up approach. My dream is to build the Andela, which I don't know if you're familiar with, but Andela forms dozens of thousands of coders per year. I want to build the Andela of soft skills. So if there is some taker in the audience, reach out to me.
Yes, well, the founder of Andela E is also co-founder Flutterwave, isn't he? And one of the success stories,
which I've invested in, so I know him very well.
Yes. Well, thank you for painting a picture for us of what it's like to work on the continent. I hope by now we've convinced our audience that they should care about financial inclusion, whether it's here at home or wherever you are in the world. But maybe quickfire before I get into specific questions for each panelist. Who is doing it well? I have a fangirl list of everyone that I doodle on my notebooks, the names of the fintech companies that are doing great things in financial inclusion, whether that's Moniz here in the UK or Pocket, for example, but also those abroad like Paystack, for example, out of Nigeria. So maybe quickfire. Well, I'll ask either a specific company or maybe an initiative that you are a fan of that you think is actually approaching financial inclusion and literacy in the way that you think it should be approached, and why. So I'll start with you, Alice. Who is doing it well and why?
I'm going to cheat a little bit. It's not exactly fintech, but I think it's interesting to look at what governments are doing as well, and what we can learn from that. So one that I guess is on my fangirl list is San Francisco have a dedicated Office of Financial Empowerment, which provides financial coaching, access to bank accounts, but importantly, and the bit that I think we can probably learn from is that they incubate and test different programs to kind of solve for specific problems, be it kind of racial disparities around financial outcomes, financial shock, and so on. And so I think that's something that I think we can take inspiration on, that private-public partnership. We can probably do more of that in the UK. Sorry, that wasn't exactly quickfire, was it?
No, I know. I loved it. It was perfect. And as a former San Franciscan and from Northern California, I love that. Maybe Nabil, picking up the government thread. I don't know if you want to talk about a government in particular or a company that you think is doing it well and why they're doing it well.
Yeah, I mean, it's probably unfair of me to maybe mention a company, given that we work with quite a few, and it'd be unfair for me to say pick one or two of them. Although you have mentioned,
don't want to play favorites here.
I don't want to play favorites, no. But you have already mentioned a couple, which are doing something very good in that space. Maybe I'll sort of similarly a bit like kind of slightly cheap, but I'll talk a bit more around technology. And you mentioned government. I think for me, one technology that's a really important technology for financial inclusion is prepaid. I mean, prepaid has existed for many years. People might remember, back many years ago in the UK, for example, these were sort of, cash account type products, or ones where, students, or if you're under, 18 or whatever, you could get a card and you could just put some money onto it and pay for things. It's obviously now used in many other fintechs. But that technology has been used by government to disperse funds directly to citizens. And, you don't need to have a bank account to receive those cards. You don't, there's relatively light KYC, so know your customer requirements around them. And they do reach some of the most vulnerable people. So in the UK, for example, we see those cards being used with people who are providing care to those who perhaps have mental or physical disabilities. We've seen those reach people with emergency payments. So, for example, there was some flooding in Herefordshire last year, and the local council there decided to issue emergency cards, which were given to people with money loaded on there. No checks required on that, and then they could use that money to spend ASAP. And obviously, over the last 12 months during the pandemic, where there's been a bit of concern around cash and a number of businesses essentially refusing to take cash, certainly in the UK, we've seen prepaid being a way in which people who are clinically shielding, so having to stay at home, can actually use those as a kind of volunteer card. So people can actually use those cards and do, shopping and essential good shopping, things like that for them. So I think for me, I'm a real big fan of that technology, simply for its versatility, and also because it has wide application for including people who perhaps haven't been included before, or who may be perhaps skeptical about, opening up a bank account and, being part of that kind of mainstream financial system.
Absolutely. I remember when I worked at MasterCard back in the day, I used to sit back to back with the prepaid team, which is now referred to as the fintech and EMI team. But I remember back then, prepaid was also inclusive of Revolut. So maybe over to you, Richard. I know that you were at Revolut, and you are not allowed to say world remit on this question.
Oh, no.
Who is doing it well and why?
You spoiled my answer there, damn. No, I mean, listen, I think, if you are going to force me, I will go back to Revolut, right? So I do think with like 5,000 different sort of country corridors around the world, which I think is just awesome in terms of breadth of coverage, and the connectivity to mobile money, I think is awesome. But I mean, what I did like about Revolut, right, was it was trying to solve for the hard use cases around identity, not just the easy ones. So that's the problem that Des was flagging. I mean, we did at Revolut actually accept sort of some of the non-standard forms of ID that many banks reject, and so we're actually able to serve some of the more difficult, like refugee and so on populations that often get neglected, and actually often had to resort to quite sort of into high-touch human solutions to that, because you often can't do it in an automated way. So, and a firm that often kind of is viewed as only about the automation, I thought that was quite a highlight to actually be ensuring that customers could be served who didn't fit those kind of standard automated solutions.
Amazing. Over to you, Des, who's doing it really well, maybe in the identity space or otherwise?
Yeah, I mean, obviously you have already mentioned quite a few, and I agree with the government dispersal thing, and Nabil kind of set that out quite well. For me, I guess it's I kind of always remember that I think the big issue found, I can't remember his name, always said it was very expensive to be poor. And I think that's what we've found in any of the, whether you call them fintechs or the space that's trying to help the undeserved. It's a very difficult population to kind of provide around the regulations. So again, unfortunately, I'm looking for tiered and progressive type of companies that are looking for it. And more often than not, I can actually give you a counter argument of examples where I've seen it going wrong, purely because it's not being used for the purpose it was originally for. Just one example, if you don't mind. I think, apart from the fact that I think universal credit doesn't engage or empower people, it actually disables and enslaves them, the universal credit process that we have in the UK. And again, that's just basically seeing what's happened with a few people that have gone down the financial exclusion route. But I think open banking, for instance, not the right place to talk about this, but that opportunity is being certainly abused by rental agencies at the moment, in that they're asking now for all prospective tenants to provide all their transactions to prove that they can make their rental payments. And I think that those that don't have full bank accounts or live in below a certain level, it's going to exclude them, because you see so many rental agencies turning around and saying no social payments accepted.
I definitely.
Sorry, I've turned that round the other way.
No, but it's a very relevant point, and I know our friends at Fronted are trying to help with that, specifically using open banking at the moment. Last but not least, Matteo, quickly, who is doing it well, whether here, in Europe, or Grab? Oh, well, yes. And once they SPAC, I'll be the first to invest. Absolutely. Okay, well, we'll leave it at that. I want to make sure that I have time to chat to everyone with a specific question, because this is a treat for me to have this group of people here. So I'm going to go back to Alice here. I know that you focus a lot on young people in your work, and I think it's really important for us to highlight the fact that young people have been disproportionately affected by this pandemic. I was reading actually that they were saying that there were nearly 500,000 18 to 24-year-olds. So 13% of them were unemployed in November 2020 to January 2021 due to the pandemic. A lot of people coming out of school, perhaps not able to find work. So I wonder, what does financial inclusion and literacy mean today to young people? And how do you think we go about actually achieving that beyond just a primary school lesson, as you said earlier?
Yeah, big question. So I think I think this sort of goes back slightly to the point I made earlier of turning it on its head and looking to, should I say, governments and financial institutions to provide the products and communicate better. Let me start with the financial literacy point. I think, so with my experience with the Regulate Buy Now Pay Later campaign, which, just to quickly say, I think it is important to say that Buy Now Pay Later does have a role in financial inclusion, and it's not sort of saying they're all bad, but one of the problems that I noticed and that led to the campaign kind of coming about was the fact that many of the Buy Now Pay Later providers were, putting these fairly new products onto the market that people didn't really understand and didn't necessarily see their role in fully explaining what those products were and how to use them well. And the consequence of that was, and in tandem with that, the poor affordability assessments meant that you were seeing young people in particular quite confused as to what these products were, how to use them well, as I say, and ultimately getting into some financial difficulty. Now, this wasn't the majority of people, and I think often I would be told by the Buy Now Pay Later providers that, but that's the minority. But I think that's a really great point, that often with these problems, we end up kind of just looking at the average and prioritizing the average person, which might be, 90% of people that are absolutely fine in using financial products and have access to financial products. But there's always a group that don't, and perhaps don't have the privilege of as high levels of financial literacy and so on. So I guess that's the question of, well, what can you do about that? And to a degree, the request of the campaign was to say, well, that should, if the Buy Now Pay Later providers themselves aren't going to do that, then that should fall on the regulator. As Des said, though, there's definitely questions as to, the success of regulation and what that actually looks like. But whatever it is, I think my answer would be that it comes in the shape of protection and also good quality information at the point at which people are making decisions, financial choices, so that they can do that to the best of their abilities. So I think that's where kind of I've got to with it. It's a really difficult one. And then more broadly, I think looking at what the role of the government, this is slightly going out of it, but we saw with the recent budget, solutions to try and get generation rent onto the property ladder, for example, with this 95% mortgage guarantee scheme, which isn't even just for first time buyers, and then you've got Help to Buy and so on, and I think it's just there's this huge lack of solutions which are genuinely kind of in the best interest of young people, first time buyers, whatever that might be. And there's always a kind of perhaps looking at it cynically, how is that actually going to end, and aren't we just kind of inflating prices even more, and so on. So I think I think that's where the big gap is. Whether that's actually a solvable problem, I'm not sure, but that answers your question to a degree.
I think, as a product person, I'm always going back to the customer and what does the customer actually need. And so I completely agree with you in that, yes, there may be a minority, but how do we solve for their pain points? I think, Nabil, you and I have talked about this a bit, and I know MasterCard has done a lot of work in this space on digital inclusion. And so we have seen a huge shift to digital payment solutions. The QR code is having the best comeback ever, but how do we cater to people from the lens of financial inclusion when they are digitally excluded, and how do we go about solving for that?
Yeah, I think so. And we're very much of the view that ultimately it's always going to be a sort of mixed ecosystem. That we're not suggesting by any stretch that cash should be phased out or anything like that. But I think what the pandemic has kind of demonstrated, at least in kind of my view, is that actually kind of paradoxically almost, digital actually end up being a bit of an enabler for inclusion, because, as I say, a number of businesses here in the UK at least stopped accepting cash. Many ATMs ran short of cash, And obviously, if you were someone who was having to clinically shield at home and you weren't able to leave your home, how are you able to easily, pay for goods and services if you, for example, weren't online? Unless you risk going outside and going into a shop and all the risk around potentially catching COVID in that sort of way. So actually, digital payments and a number of solutions I've mentioned before help to sort of bridge a bit of that gap. So I think for me, the importance of digital when talking about financial inclusion is not to sort of look at digital as being the enemy or as like, but by its nature, sort of a tool of exclusion, which sometimes it does, when you talk about, mobile bank apps, or you talk about online banking, immediately people think, oh, well, that's just trying to get people out of physical branches and, away from cash and the rest of it. It doesn't have to be that way. But one of the things that we also think is really important in that is, in the UK at least, and I expect this is the same in many other countries, indeed in Africa, it's why, sort of M-Pesa and others have been very successful. This is because there's also sometimes a lack of digital infrastructure in terms of people actually aren't able to access, for example, the internet very easily because the internet connection isn't very good in your area, particularly in rural places in the UK. It's still really slow and really difficult, and that also affects businesses because as a business, if you have a payment terminal, but you have poor internet connectivity, you can't accept payments. And therefore people want to buy things, but they can't because they can't use their cards. So for me, those two things around digital, and I'm talking digital in the wider sense, infrastructure as well as user experiences and all that sort of thing. I think those two things are really, really important to kind of get right. And as you say, here at Mastercard, we now no longer just talk about financial inclusion kind of in one sort of bucket and that's financial inclusion and this is digital inclusion. Like we see the two of them kind of having a very strong relationship with other, because I think ultimately we have to face up to the fact that at least in the UK and probably most bits of Northern Europe, cash is declining as a kind of method of payment. We need to make sure those people aren't left behind. And actually, that's not necessarily just about ensuring that ATMs are available and branches are available, and there's lots of economic arguments about why that might be a challenge, but it's also around how do we upskill those people then to kind of get on the journey as well. And I think that's the thing which I think we would sort of emphasize as being very important.
Absolutely. I am a personal proponent. I go around telling people what banks need to do is open up these Apple Genius bars. And teach people how to use an iPad, teach them how to use their digital banking app. And I would love to see it. I don't need another bank coffee shop. I need a bank Genius bar. Over to you, Richard. I'll finally allow you to talk about World Remit. I know we talked a bit about bridging financial inclusion here in the UK and abroad and in emerging markets through the lens of remittances. So you touched on it a bit about how technology and how World Remit in particular is approaching this. But I'm curious if you could tell us how World Remit or other actors like this are keeping bad actors out of the equation.
Yeah, sure. So I guess this is a really important problem because I sort of mentioned earlier that there's sort of 5,000 different country corridors being served. So that's UK to Ghana or US to Pakistan or whatever it might be. So that's a huge number of different countries being served. So different licenses, different jurisdictions, regulations, and so on. A lot of the sort of financial crime prevention is quite common across that. And I guess the first thing to start with is, it's all digital pay-in. Mm-hmm. Which is quite a change from traditional remittance industry where you had clearly mostly cash-based. So the classic, I won't name them, but the classic kind of sort of agent-based cash deposit model in the send country, and then typically also cash pickup in the receive country. So we do offer cash World Remit on the pickup side, but not on the send side. So you have got full sort of traceability around the money coming in. And as mentioned earlier, also mobile money is becoming increasingly prevalent as well as the bank account as a destination vehicle. So I think for me, ultimately, the more you have traceability of the flow of the funds, the more you can help to pick up bad actors. Clearly, we talked about identification techniques and both. I think that's an important part. But there's also kind of in life, how do you use that data to help spot sort of patterns that might be bad actors, be it people that are sending money to a corrupt official, or be it people that are financing terrorists, or be it human trafficking, or there's many sort of sadly bad use cases out there. Plus you've got fraudsters trying to sort of take over customers' accounts. So yeah, ultimately for me that it's largely a data problem, where if you can have really strong pattern recognition, machine learning type approaches, then you can pick up sort of unusual activity and then apply the human beings you've got to really dive deep on those activities and try and spot the bad guys, try and make sure you report them and hopefully get caught by the authorities. So yeah, I think ultimately data is key there, and digital is data. So I think the move away from cash there and things like mobile money can be a massive enabler there of security and fraud and money laundering prevention.
Absolutely. So for the purpose of time, I'm being told we have to wrap it up soon. Matteo has kindly sacrificed his individual question. So I'm going to end with Des. Just the last thing, I know, financial inclusion, oftentimes we are working with people in vulnerable situations. And so a big part of that is building trust right off the bat. And you already mentioned with new technologies, specifically open banking and with rental companies, that they're kind of abusing the access that they have with open banking to people's transactions. So I'm curious what you think, and how do companies with new services, with new technology, build trust quickly with their customers who might actually be in vulnerable situations?
Yeah, trust works both ways. I mean, we've got to trust that the client is who they say they are and they're doing what we think they're doing, but they also have to, that individual has to trust that whatever information we've got, we're keeping it. I mean, it's a both way thing, and I think there's been a lot of distrust in the last year, certainly brought out by the pandemic and the lack of, you hear about the government loan schemes being abused by fraud because they didn't do enough checks on the businesses, etc., etc. So it is a two-way thing. However, this panel for me has kind of proved to one thing that innovation is it's not just the same old. It's about doing something that's already been done, but doing it better for one respect. But also that a lot of the ways that we're doing it are still using the old, what I call the payment rails and the systems that were devised before the internet.
Yep.
And so therefore, you look at the Hawala system, and I'll say it before anybody else does, that's an older system than I am. Now, it's trusted, but there's always distrust because there's bad actors in every type of payment flow. And Richard will be able to, that I back up what Richard was saying about how you're looking at the bad things and whatever. But I personally think that what's proved to me today, even just talking with you people, is that whatever we try and do, it's not, innovation isn't something so new that nobody else has thought of it. Oh my God, it's normally a rehash of the way of doing it. That's how Apple have been. They're not innovative. They always do something better than what was done before. And I guess just to end, I would say for me, a phrase that I used, I was talking about Brexit back 5 years ago, when I said that the Stone Age didn't end because we ran out of stones. We just found a better way to make the same tools with. And I think that's the same with payments, financial inclusion, everything like that. Finding better ways to use to make those tools that enable that. And I think that's the important part of it.
Amazing. Well, I would never dream of speaking for Matteo, but those interested in Time Pledge, please get in touch. He also has a book called Talents and Rebels out. Thank you so much to this panel for joining me today. I'm sure we could go on for another hour, another 2 hours, and talk about financial inclusion. As I can tell, it's very close to all of our hearts. So thank you so much for joining us today. And feel free, I know for me, feel free to get in touch via LinkedIn, Twitter. I think a lot of the panelists are also quite active on LinkedIn or Twitter. So get in touch. Thank you so much for joining us today.